Hi, this is Bill Miller of StartRealEstateWealth.com. This video will be about pricing your home appropriately to sell. It's important to start off by saying that the price that you assign to your house should be carefully considered, but a lot of it depends on what your goals actually are. Are you needing to sell quickly? If so, then it's important to price your home on the lower end of the spectrum in order to attract more views to your listing and reduce the number of days your house is on the market. Maybe you're not in such a hurry to sell. And if that's the case, then you could probably afford to keep your price within the higher range of reasonable market values. Just keep in mind that you don't want to keep your home on the market for too long, as this may present your home in a very bad light and turn buyers off. So what measures a home's value on the market? There are three different measurements of the value of a home. There's the assessed value, the appraised value, and the market value. The assessed value is also called the tax-assessed value. It's determined by county appraisers in order for them to be able to put a tax value number for a particular year. The appraised value is determined at the point of sale or refinance for the purpose of determining the home's value in order that the mortgage company can determine how much it's willing to lend you based on this assessed value. This service is something that the mortgage company arranges, and usually the seller pays for the service. An appraised value is typically considered to be a more accurate value for the home than the tax-assessed value. However, the market value will give the most accurate value for the home. It's the value that the buyers are willing to pay for your home. Many times this value can be estimated well by doing a market analysis. A market analysis takes into account several factors. When a real estate agent does a market analysis, they look at active listings, pending listings, and sold listings. Active and pending listings can show a snapshot of what's going on with how similar homes on the market are priced. However, it doesn't really show results. Perhaps the most telltale is the sold listings. These are homes that have sold over the last 6 to 12 months. This shows historical data that is very useful in making comparisons to how well the homes sold that are in close comparison to your own home. What this data reveals is the price at which the house is sold, as well as the number of days they sat on the market before they sold. It's important to look at the market time because this is a good barometer for measuring how appropriate the pricing was for the house. If it was on the market for many weeks, then it's obvious that the house was priced too high. This should give you a good clue as far as what price to list your house. So that concludes our look at pricing your home to sell. And I hope you learned some good information as far as how to appropriately price your home to sell within a reasonable time frame. My name is Bill Miller at StartRealEstateWealth.com, and I want to direct your attention to the link at the bottom of the page. This link is also below this video. So go ahead and click on it and get a free copy of my guide on how to sell your home quickly. It's free to you today if you go right now and get it. So thanks again for watching, and I wish you all the best in selling your house. I'll see you on my other videos. Take care.